This is going to be recorded so that we are able to share with other scholars and alumni who are not able to join us today. So my name is Tanya Wilcox. I'm the program director for scholar and alumni programs at TheDream.Us. Thank you for joining us today for this great webinar on home buying. This is very exciting because home buying is such a hallmark of joining the American dream or the middle class in America. So if you have the ability to to buy a home, congratulations for achieving that, that ability to do that. And hopefully today you're going to get a lot of information about how to do that. And it is my absolute pleasure to let you know that this webinar is actually brought to you by the Dream.Us Alumni Network and Council. And here is going to join you one of those council members who will tell you a little bit more about the Alumni Network and what is going to be happening today. But before I introduce him to you, we do want to know who is here with us today. So we're going to launch a very quick poll. So please tell us if you are one of our current scholars in college, or if you have already graduated from the Dream.Us, or if you come to us from another venue or through another path. So I'll give you seconds to fill out this poll so we know who we have with us here today. Okay, so I see about 80% of you have voted, so I want to get 100%. So I'll give you a few more seconds. Please keep letting me know. And I know everyone, I know some of you are still joining. As you are joining the session, please fill out the poll so that we know who's here with us. And it looks like we have about 75 participants right now. Okay, so why don't we, and more joining us as we speak. Okay, so let's go ahead and close the poll. It looks like about 60% of you, or 59% of you, are current scholars, 35% are alumni, and then we have others joining us. So that is great to know. Welcome, everybody. So now let me go ahead and introduce Edson Enrique Grimaldo Carvajal, who is one of our alums. He graduated in December of 2017 from University of Texas at Rio Grande Valley with a BA in business and marketing. And ever since we created the Alumni Network, he joined. So about 2 years he's been in the Alumni Network and is one of our key members of the leaders of this network as a member of the Alumni Council. So with that, take it away, Edson.
Hi, everyone. Good afternoon. Thank you guys for coming to the Home Buying 101 session. The Dream.Us Alumni Council, we're very excited to bring you this information in this event. Please let us know about any other future events or info that you'd like. We can put those together. And please, if you have any questions, please wait to the end, or feel free to put them in the chat box, and we'll answer them at the end of the presentation. So, and just to remind you, this will be recorded for the other alumni. Okay, so we'll get started with introductions. We have here Mr. Gustavo Pacheco. Mr. Gustavo.
You're muted, Gustavo.
Apologies. Hello, everybody. So I want to start by saying a couple of things. Food, shelter, and clothing are three of the predominant needs of humanity, and owning a home answers one of these, right? Thank you for spending this hour with us. It's an honor to be here. I want to give a huge shout out to Gabby Pacheco and to the Dream.Us for giving us the opportunity to talk to you guys about real estate. My name is Gustavo Pacheco. I'm a real estate specialist and the owner of Living Premises team out of Miami, Florida. Once upon a time, I too was a DACA recipient myself and shared the feeling of uncertainty on whether or not I could achieve the American dream of owning a home. This is why I decided to be a part of this presentation today. Now, I want to let you guys know to forget about everything you've heard in the news. The bottom line is real estate has absolutely been, for the past 150 years and for the next 150 years, the best place to grow personal fortune, the best place as an investment to grow your personal wealth as well. Okay. And then with this, I want to hand it over to Alejandro Otero.
Thank you, Gustavo. Good evening, everybody. I am Alejandro Otero. I'm with PRMG Mortgage, with Otero Mortgage Group. I'm a senior loan officer, and basically I am a direct lender who specializes and helps everybody who's interested in purchasing and basically seeing if you're going to qualify for a home loan. I take a look at everything to be able to see up to how much you qualify for, what the everything we're going to be going into today, and more importantly, to be able to get you updated and getting into your new home for your first time. So I look forward to going into the presentation. I want to thank everybody for this opportunity to have myself here to make this happen for you guys as well.
Okay, so let's go ahead, Melanie, and and joining me today, I almost forgot, is my colleague, Melanie Buitron, who's also a alumni of TheDream.Us and now works at with our staff as a program manager. Say hi, Melanie.
Hi, everyone. Happy to be here. Thank you so much for being here.
And Melanie's going to go ahead and share the PowerPoint and the presentation so we can get started. And she's also in the chat box. She's going to put a link to the PowerPoint so you can all access it and download it. But first she will share her screen. There you go. And we're going to go ahead and get started. And here we go. So we did presentation. So I think we go to the next. Go ahead, Edson.
Okay, so just a session overview. Some of the topics we'll cover today. Real estate is very broad, so we're not going to be able to touch base on everything, but we're going to give a good overview of everything and hopefully answer some of you guys' questions, right? So some of the topics we're covering today is benefits of owning a home. Are you ready to buy a home? How to prepare the home buying process, types of loans, applying for a loan, state of homeownership by race, and real estate as an investment. So I'll hand it off to Gustavo so he can get started on his.
Okay, so basically here you have a quote that says, "A man travels the world over in search of what he needs and returns home to find it." So this can mean a couple of different things to different people. But for me, this is every day you go out there in search of trips and fancy things and cars, but at the end of the day, when you come back home after work, you return to your castle, right? And that's what gives you the fulfillment, to see your daughter at home with a smile because she has her safe home, you know. And this is pretty much what this quote means to me, and I thought it was nice to share with you guys. Next slide, please. So basically, there's 4 benefits of owning a home, right? Number 1 is the American dream. Establishing roots in a new country is life-changing. Number 2, enhances personal well-being. Feelings of security and achievement lead to improvement overall confidence. Number 3, strengthens families and promotes community, providing a safe place for your family to gather and create memories. So this goes back to, like, brings me memories when I purchased my own home. It was how can I tell you? Everybody was against it. Oh my God, you're buying a tear down. This house is too expensive. Why are you buying this house? You're gonna spend a ton of money. So to me, it was very important to be able to get a house and pretty much make it look how me and my wife wanted to look. So we have the memories of going to Home Depot, going to get the tile, to getting the person that helped us with the kitchen, you know, making this our safe haven, our little castle, right? So this right here promotes the community, right? And the family, strengthens the families. I remember my father-in-law was totally against it. You know, it's like, oh my God, why are you buying this? And now he's like, oh my God, I'm so proud of you. I can't believe the house looks so good. And guess what? I have $200,000 worth of equity in that property, right? So it's actually one of the biggest and best investments I've ever done. Also, builds your personal wealth and equity through appreciation, tax benefits, and debt reduction. So this right here reminds me of working with another DACA practitioner, Andres and what's her name, Lucia, where they were worried about buying a house because we're at the top of the market right now, we're in what's called the seller's market, right? And she was worried about, oh my God, if this property is too expensive, am I going to lose money in the future? Gus, are you sure this is what we have to do? And I said, absolutely. So we closed in November. Was it November? So fast forward 4 months, I called them for a couple of weeks ago because I was doing comparables on my customers. And I told them, listen, I got good news for you. In just 4 months, you've made $20,000, right? So this is, in my eyes, the best investment you can do, right? As a homeowner, you may reduce your debt and mortgage. As a tenant, usually your rent is going to increase 100, 150 bucks every single year, right? So the average homeowner, listen to this, the average homeowner has 44-1 the net worth of a renter. Let that sink in. It's 44-1. Real estate is the #1 hedge against inflation. So right now, 2020, we had the pandemic. We printed more money than ever before in the United States, okay? People right now are worried because it's a seller's market and all the prices have increased. But we gotta take one thing in consideration. What happens when you're in inflation? What's the best hedge against inflation? Buying a home. Because you're buying and locking in that property at a price and at a rate that with inflation, the property's just gonna go up in price. So you're winning no matter what. You know what I mean? Like it's still gonna be a great investment. Okay, next slide. How do you know if you're ready to buy a home? Well, these are 4 key features, right? Stability. If you have a stable income and you have worked in the same job for at least 2 years, okay? Financials. Your debt to income ratio is less than 45%. You have a decent amount of savings. I want to say it's 5% to 8% of the average of the home that you're going to purchase. And make sure your credit score is at least 580. I know a lot of you guys are just starting to get your credit scores and working on them. So just know with a 580, you should be able to purchase a home without a problem. Think about the future. Buying a home is probably going to be one of your biggest investments you're ever going to do, right? So for the next 5 to 10 years, try not to have another big expense because it could hinder your finances, right? And support. Working with an experienced professional will save you time and money. Next slide, please. Okay. So how to prepare. Gather necessary documents. Alex here is going to help us a little bit more with this, but I'm just going to go through it briefly. Income verification, proof of legal residence, and eligibility to work, and make sure you have your credit report with good credit in it. Determine how much you can afford. Use an estimated mortgage calculator to determine how much your monthly payment could be. Keep your mortgage payment between 25 to 35% of your income, okay? And build your dream team. Hire a real estate agent and lender with a proven track record that are honest, reputable, and have years of experience. Next slide, please. So this right here is the home buying process. This is a lot more complex than what we're gonna make it look like right now. But for the sake of the time that we have, we're gonna do like a rapid version of it, okay? Number 1, get your finances in order. 6 months to a year in advance, pay down debt, save for a down payment, closing fees, and hiring moving costs. Sorry. Next, hire professionals. People will say, yeah, but how do I know a person is a professional? Well, ask your friends, family members, people that you know at church. Hey, when you purchase your home, who did you work with? Make sure you ask the right questions. You got to ask them, how was the process? Would you hire this person again? Make sure that you're getting somebody that's reputable, and also meet with a lender you can trust. Get pre-qualified and pre-approved. That's very important. You need to get pre-approved before you go out and look at these properties. Why? it sucks to get heartbroken when you go see a property and you say, oh my God, I need to have this house. You're not ready. Trust me, in this market, you're gonna lose that property. Okay. So you don't want to go through that heartbreak. Make sure you get pre-qualified first. Next, you will begin the home search. Beginning the home search, I always tell my customers these two things. Make sure that these two factors fit when you're looking for a home. The layout and the monthly payment. Don't put your head around the actual price, because remember, each home has a separate number in price in a mortgage. Why do I say this? There's a lot of variables that goes into your mortgage payment. The tax bill, the insurance bill as well. So once you find a house that you feel you like the layout, go back to your lender and say, this is the address, 123 Main Street. Can you please tell me how much I'm gonna pay here? He's gonna be able to give you a ballpark of how much you're gonna pay monthly. And if those two things fit, forget about the price. I mean, obviously you're gonna have your budget, right? Go for the home. So that's the advice I give my customers. Then begin a home search. Okay, next. Put an offer. Unless you live in a little town in the middle of nowhere, we're in a very, very, very crazy seller's market. For me, right now, I just had a listing that I posted myself. I put it overpriced. Somebody came from Italy, is buying this house for $630,000, and it's giving $35,000 in cash if it doesn't appraise. So that's the type of market we're living in today, right? So if you're gonna put an offer, make sure you guys are ready and you really like the house, and you submit a strong offer. I mean, if you want the house, you know what I mean? Then when you put the offer, it gets more complicated here, but once again, for the sake of the presentation, we're gonna go through it quickly. Is complete the inspections. Make sure that you hire somebody that helps you, an inspector that's licensed and insured. It checks out everything on the property. Make sure that the property doesn't have cast iron pipes, and make sure that you're able to get the insurance credits as well. Next, you get the appraisal done. Just depends on the property. In today's market, once again, all my listings are selling over appraised value. So it just depends how you're gonna negotiate there. Secure insurance with the inspection report. And then title comes through and you receive the clear to close. Congratulations, you're a homeowner. You've achieved the American dream. And now it's time to create memories for your family and friends. Ta-da. Now, my friend here, Alejandro.
Thanks, Gus. Let me tell you, I appreciate once again the opportunity here. And after everything Gustavo just finished saying is on point. That's 20 years of experience for myself being in the lending industry. I work with countless realtors, and helping first-time home buyers or multiple buyers purchase and get finance is such a great satisfaction for me, because I'm able to see them from the beginning on where they're getting pre-approved all the way to the day that they're closing, and it's such a great moment. So I love what I do, and hopefully I can kind of show it to you now in what I'm about to go over. So as we go into the loan aspect, obviously everyone, there is a lot of information. We don't expect you to have all the details right now. It's important to ask these type of questions, but just know in general, you won't know when you qualify unless you ask. You won't know if you qualify unless you're with a person such as myself, like a direct lender, senior loan officer, to be able to guide you into these next steps. And trust me, the way I operate and multiple lenders that would operate, they want to take you step by step on how this works. So now your options for financing a home, the type of loans and what you need to qualify. So we go to the next slide. We're going to talk about FHA loans. So there's two types of loan products. There's FHA and there's conventional. So right now we're going to talk about FHA, which stands for the Federal Housing Administration. Now, the property, to do an FHA loan, the property does have to be your principal residence. So it's your primary residence. The borrower does have to have a valid social security number. Of course, the borrower is eligible to work in the United States as evidenced by the employment authorization document issued by the United States CIS. And then, of course, individuals under the DACA and TPS with the U.S. Citizenship and Immigration Services are legally permitted to work in the U.S., of course, are eligible to apply for mortgages by the FHA as long as they meet all requirements. So all that means basically is that we're going to just take a normal loan application, getting your legal name, social, date of birth, where you currently live, employment, 2 years. You could have multiple employments. You could be self-employed. There's a lot of different avenues that you could be able to utilize to be able to qualify for an FHA loan. Once again, self-employment, 1099s, meaning that you are subcontracted with a company. So you work for a company, but they pay you as a 1099. That's also valid as well for us to be able to qualify based on the income. One of the main highlights, of course, is going to be 2 years, right? You have to have at least 2 years of employment. It could be multiple jobs, as long as in 2 years there are no gaps of employment. So as long as you can have 4 jobs in the last 2 years, as long as they were consistent, you're good. We are even having a little bit of leg room, of course, with last year, unfortunately, with COVID and everything that was going on. A lot of people were laid off, unfortunately. A lot of people had to separate from their company due to the COVID pandemic. So we have a little bit on case-by-case basis. We do have exceptions that we're able to utilize as that as well. But like I said, W-2 employees, self-employed, 1099s are all used for FHA. Once we calculate income and find out, we're also going to talk about how much money you have to purchase. There's gift amounts. So let's say you don't have all the money, but your aunt, uncle, brother, sister, mother, father wants to assist you in purchasing a home. They said, I'll donate or gift you 1,000, 5,000, 10, 15,000. You're able to utilize that as well because it's called gift of funds. Once we basically get you pre-approved, I run the system to make sure you're officially approved. And then once you're approved, I'll send you and I'll basically send you and everybody who's applying, the realtor, everybody, the approval letter. So you guys can actually start going out and then, of course, looking for properties. And that's the main thing here. Getting approved, as Gus had mentioned earlier, you want to get approved first. See where you're at. Know what the payment is. That's the most important part in all this. You want to know where the payment is. You want to make sure it's something that you can handle. One thing that I know Gus and Edson were mentioning, when you guys look at the amount of money you're going to spend in renting comparing to buying, just always remember you're paying someone else's mortgage. Start paying your own mortgage. At least find out. One thing about what we do is if you're not ready now, we're going to put you on a path to be ready. I have countless of clients that weren't ready when they first spoke to me, but now they're living in their home. They're living in their own home that they're able to purchase because they did exactly what I advised them. Thank God, God's been good to me, 20 years in this industry, and it's been a great experience helping so many people get into their homes. So it's a great opportunity for us and for you guys to be able to look into the options you have. Now let's move on to the next slide, if you don't mind, please, so we can start talking about conventional loans. So as I mentioned at the beginning, we have FHA loans and conventional loans. So conventional loans kind of work the same. Obviously, you need still a valid social security number. All non-permanent resident aliens must provide evidence of one of the following: unexpired authorization document, one of the following visas, as you guys see there on the slide. Visa classification is one of the eligible visas listed in this section. Now, if the borrower is sponsored by the employer may verify that they are sponsoring the visa renewal. A valid, once again, social security number is required. Just to clarify, a tax ID number is not acceptable. It would have to have a valid social security number. And employment should be expected to continue for at least 3 years from the closing date. Now, all of this, once again, kind of summarizes the fact that when you're looking to purchase, even on a conventional, now, one of the biggest characteristics, conventional, is typically for higher credit scores. So as Gus had mentioned, 580, that's the base point for FHA. 580, I would say, to about 660. Then from 660 to about 760, you're probably looking at a conventional. Those aspects of it, you're going to have a professional like me be able to guide you on which is going to be the best loan product for you to take. But at the end of the day, this definitely comes down to making sure how much the payment's going to be per month, including taxes, insurance, mortgage insurance, how much down payment you're going to pay, closing costs, all that. Having that information is going to put you in a better position of knowing if right now you're ready. And that's one of the biggest keys. The other loan that we haven't talked about yet, but I'll just mention it, is VA. There's VA loans out there as well that we could talk about at another date. Can we continue? Next slide, please. So what do I need to apply and qualify? So as we kind of been discussing, with 2 years of employment, 2 years of income verified. Now, 2 years of income verified comes down to your tax account. So for those of you who are self-employed or 1099, you definitely want to have at least 2 years of income tax that shows that income, because we have to have an average income amount, right? 1 year you could have done great, another year not so bad. What's the average for the two? And that would be your income. Of course, credit report, obviously to see the 3 credit bureaus, Equifax, TransUnion, and Experian. What we use and every lender uses is the middle of the 3. So you have a high credit score, a low credit score, and a middle credit score. That middle credit score is going to be the one that we are going to basically have you apply and use to be able to get the home loan. Of course, down payment, closing costs with sourcing. So down payment, closing costs combined. When we mentioned with sourcing, that means we do have to verify where the money comes from, right? To avoid, to make sure money laundering taking place, right? So it can't just be, I have cash in underneath my bed and I want to use that for closing. Those are conversations we're going to have to talk about, but it's basically sourcing where the money came from a bank account directly to the title company to do the closing. So those are things that your loan officer will be able to assist you with as well. Debt to income ratio to qualify, something like, once again, Gus had mentioned. These are things that there are percentages you can't go over. So the percentage that you can't go over varies between an FHA loan and between a conventional loan. So an FHA loan, just to give you an idea, allows you to borrow more money against your income. To give you specifics, you could borrow up to 56.9% of your income at FHA. Conventional, you could only borrow up to 50%. So once again, this is going to be catered, and that's why it's so important to have a knowledgeable loan officer to be able to guide you through this process, because the main thing you want to do is make sure that they're pointing you in the right direction. Make sure that they're going to give you the best and the most purchase price you could potentially buy, and more importantly, making sure the payment is good for you guys. So that's one aspect of it. And then, of course, the other one is the minimal credit score. Once again, FHA is a 580 or higher, and conventional 620. I always stayed around 660, but 620 theoretically is the minimal to apply. Once again, case by case, we'll always look at every person's situation to be able to analyze and see what's going to be the best route forward. Now, let's move on to the next slide. Now, where can I get a loan? So there are basically 3 types of ways you could get a loan. Obviously, a reputable mortgage company, which would be a broker or a lender. I myself, with Paramount Residential Mortgage Group, we are a direct lender. So we are the bank. So a broker, just to give you an idea on the difference. A bank, we're the bank. So your loan would close under, for example, under our name, PRMG Mortgage. A broker is somebody who's a middle person between you and a lender. So what their job is to find the lender to be able to see who would be best to qualify you. So they're the middle person. So obviously a lender myself, I have direct access, to be able to talk to the underwriter, face-to-face processors, things like that. Then you have retail banks and credit unions. Now, retail banks, of course, are going to be your Chase, your Bank of America, your Wells Fargo, Citibanks, and then of course your local credit unions that you have. Of course, you could always apply with them. Just to be very forthcoming, they're very meticulous in regards to those who qualify, but I always, if that's something you want to look into, by all means, it's something another avenue, but they do mortgages. And then of course you have a private lender, which is someone who pretty much doesn't go through the actual aspects of qualifying. A lot of ratios are different. Basically what they look at is a little bit different, but you have to put a bigger down payment. So once again, to summarize all that, it just comes down to talking with the loan officer to be able to guide you on what's going to be the best route forward. And with that, I will pass it to Mr. Edson.
Hi, everyone. So I wanted to share this quick graph here. It's about homeownership by race in the United States. And as you can see, the Black and Latino community is a lot lower than the other communities here in the US. And homeownership is one of the biggest contributors to wealth and families' wealth. And as you can see that this is one of the things that could affect us the most, which is why, we're encouraging people to become homeowners and giving them this session to help understand the process. Or we can go to the next slide. So this one's different types of real estate investments, right? It's yes, a property for you is your house, your home, but it can also be an investment. These are some of the more common ones, such as commercial. Commercial would be anything like plazas, warehouses. All those people have someone owns a property and they collect rents from other businesses, right? Then you have apartment complexes. Usually anything 5 units or bigger are apartment complexes. Those are a little bit harder to get into, different qualifications, different loans, but the ones you can use mortgage for are the single family residential. So that can also be an investment, right? So let's say you buy a house today and you live there for a year, 2 years, and then later on you're ready to move into something bigger, or you need to move because of work. You're able to still keep that house and rent it out. And rents prices depend on the area and on the market that you live in. But normally you'd be able to break even or maybe make a couple $100s on top of the payment a month, right? And then you're able to control that asset still and get another property. And that asset itself is being paid, that house is being paid off by one of the tenants, by the tenant. And then you have multifamily, which is duplexes, triplexes, fourplexes. You're able to buy those with FHA and conventional loans, which allows you to put a smaller down payment, and you can occupy one of the units and use the other two or three units, the rent, to pay the mortgage. So then what you pay out of pocket is a lot less. And that allows you to, one, give you a little bit of breathing room and feel more comfortable with the payment, but also have it as an investment that is being paid off by tenants, right? We can go on to the next slide. So the benefits and how you make money, right? How do you make money owning real estate as an investment? Well, principal pay down. Every month that you give your mortgage payment, part of it goes to the principal. So every month that amount of the principal goes down. So the equity and what you own on the property, the equity you own on the property goes up, increasing your net worth. The other one is tax benefits, as Gustavo has said. I know that mortgage interest payments are tax deductible to a certain amount. And there's a lot of other tax benefits, depreciating assets and things that you can talk to your CPA about to see how that can benefit you. The other one is appreciation. The properties go up in values. We've all heard stories of, like, in California, right? Properties going up in value from a couple of years, worth 200,000 and now worth over $1 million. So that's one of the benefits of owning real estate. The amount that it goes up in value really will depend on the market and the economy as well, right? And then the next one is under market value purchases. So under market value purchases is, for example, a house in a neighborhood, they're all about $300,000, but there's a house there for sale for $200,000. But that it just needs a little bit of repairs, a little bit of love, a little bit, renovation, and it'll be worth $300,000. So if you're able to get that property for $200,000, put a little bit of work into it, and then bring up the value to $300,000, you've made equity in that, and now you own a property that's worth $300,000 for $200,000, and you're able to cash in on that equity whenever you sell, which I believe is something that Gustavo said he did with his property. He bought a fixer upper and then put a little bit of work into it, and now he has equity in that property. And the other benefit is rent cash flow. So rent cash flow is pretty much what you bring in every month from the rent when you have it rented out, whether it's a house or multifamily, a fourplex, triplex, those other rents, right? The mortgage payment may be about $2,000, but the rent's bringing in, $2,300. So you have that rent cash flow, and you have that cash flow of $300 on top of it. We can go on to the next slide. And now we'll go to the Q&A. So I guess I'll go through the chat a little bit. And then I know Tanya will take over in a bit, just to answer some of the questions that I saw people posting. And then I'll hand off any questions to Gustavo and Alejandro. So one of the questions here is, Dulce asked, what if we don't have one of the four? I'm a recent graduate with a new job. I believe most mortgage lenders are able to qualify you with at least, for those 2 years of employment, if what you graduated with is in the direct field of what you're working in. I don't know if you have anything to add on to that, Alejandro.
Yeah, I'll chime into that. So it's a good point and a great question. Basically, the 2-year history actually comes down to also education. So if you did graduate, within, say a year, and then you started working, you've only been working for a year, but your previous was education, was school, and you graduated, that's considered 2 years. That works a lot with every kind of field. I mean, nurses especially, they were in school, they became a registered nurse, 3 months already now as a registered nurse, and then now they still qualify for a home loan because their history of employment is really education, school. So to answer that question, we can use school as a work history.
The next question is from Amparo, says, if self-employed, can we still get approved? Yes, you still can get approved. I believe then they go off your tax returns the last 2 years. The requirements are slightly different, but you're able to get approved as well. Amparo asks, are we allowed to include our parents' income with our gross income? They would, I believe they'd have to be on the loan for them to be included on the income, to include the income as well. And then,
Let me actually go back.
yeah.
I'm sorry, I
Go
want to
ahead.
go back to that. It's important. The question that we had before in regards to the self-employment, the one thing I'll always advise everybody, I'm not a tax accountant or anything, just be very careful on how you do your taxes and how much write-offs you have on self-employment. There's examples I could give you where, you know, the person made 100,000, but they wrote off because of expenses and everything, 80,000. So just so you know, the bank is only going to qualify you based on 20,000, not on 100,000. So I think that's very important to mention, because you're going to come into a situation where, well, I make all this money, and then, you know, your accountant came in and, you know, you had write-offs, you had expenses, you have all these things, and here's your net income. Now your net income is not the 100,000. It's, you know, for that example, it's 20,000. So just be very careful, especially those who are looking now or in the future, as you're doing your taxes as a self-employment applicant, just be cautious on how you do your taxes.
Yes, good point. So yeah, I know that I think depreciating doesn't affect you as much. If you do depreciate your car or laptop or something for your business, they don't count that as against you like they do with other expenses, right? Then someone else asked, says that that only applies to the 2 years of work history with school, only applies to if you're graduating with a master's degree. That's not true. I believe you can do that with a bachelor's as well. Cheryl asked, if we have a 403B, can we use that to purchase a home or borrow from the 403B? I'm not sure what that is. I don't know if you'd want to like clarify on that, or if any of you guys know what that is.
I know what that is. A 403B is a retirement plan that usually educators use. So it's like a 401k.
Mm-hmm. Gustavo, do you know if 403Bs can be borrowed from to purchase a house?
That's a very good question. I've seen people, I don't know about the 403B itself, but I've definitely worked with customers that have had type of accounts like these where they can actually borrow from, and then they have to pay it back little by little. But this one exactly, I'm not sure. That's a very good question.
Just overall, go ahead. I was just saying, overall, borrowing from your retirement account to put a down payment for a house, it could get a little tricky. So be careful about that, because it depends what the borrowing terms are from your 401k or for your 403b. What's the interest rate? What will be your monthly payment? Do you have to pay a penalty because you're borrowing? Because remember, if you're borrowing it from 401k and then also getting a mortgage, then you're going to have two debts. Are you going to be able to manage that? So really do your math, do your numbers, and analyze if that makes sense or not.
So there's a question there from Brenda that says, someone had told me that letting a lender check your credit score will bring down your credit score. How do we navigate a loan in that case? So, what I would like to say is, every single time a customer tells me this, what I do is I send it to Alex, and what Alex does, he goes and tells them, listen, you're either gonna leave here pre-approved because you're gonna give me all your numbers, and I'm gonna give you the how it's gonna look in paper, and whether you want to move forward or not, it's up to you, right? But you're definitely gonna leave with homework if the numbers are not correct. But it's definitely just gonna be depending on you, how serious and how motivated you are about purchasing the home in the next few weeks or a month or two.
And to piggyback on that, always remember, even if your credit score goes down, it's going to go back up. You know, at the end of the day, you definitely want to take a look and see factual information. Factual meaning that if you kind of just give some loan officer, hey, I'm on 680 credit score, what's the rate or would I qualify? You're going to get a very open-ended, answer, because I always tell clients, it's like going to a doctor. Hey, doctor, what do I have? Well, unless the doctor checks your blood, your cholesterol, your weight, and kind of give you an idea, they can't really give you a good analysis on where it comes down to. So it's the same thing with looking at credit, looking at income. And just to kind of piggyback again on that, running your credit, it only really affects it if you're running your credit for multiple things in a short period of time. For example, last week you applied for a car. The week before you applied for a department credit card. And then now this week you're applying for a mortgage. So what you're telling the bureaus is that you're applying for different credits, if you will, in a very short period of time. So you're telling them you need credit. So that can definitely affect your credit score because you're applying for different reasons. Now, on the flip side to that, if you are running your credit for the same reason, meaning you never ran your credit before, you're in the market, you want to start buying a house, you go to one lender. You kind of like the person, kind of like the numbers, but hey, it's a mortgage. You don't want to just go to one person. It's not like buying a car. You want to definitely make sure you have the good options. So you're going to go to another lender and maybe a third lender. By you running your credit for the same purpose, the bureaus don't penalize consumers for that because they know they're looking. Just like car dealerships. They run your credit at one dealership to a few different banks. You didn't like the car, didn't really, you didn't like the numbers, go to another car dealership. As long as you're running your credit for the same thing in a short period of time, it should not affect your credit score. The only time it does, as I explained, is if you're running it for multiple reasons in a short period of time.
Yeah. So Stasia asks, is 20K a good down payment? It really depends. Some of these questions are a little broad and it really depends on the market and on the loan that you're using, on the house price, right? If a house is priced $200,000, 20K down is 10%, which is more than what most conventional and FHA loan programs require. So that just depends. So yeah.
I was going to add to that, Edson. Not only that, just remember to always factor in 20,000 down payment, but are you factoring in closing costs? Mm-hmm. So remember that you have down payment and closing costs. So do you have 20,000 just for down payment, and you have another, to throw out a number, it's not exact, another 9,000 for closing costs, meaning you have 28,000, or do you have 20,000 total? So if you have only 20,000 total, then you're going to be looking at probably a very low down payment, so you can fit your down payment and your closing costs into that $20,000.
Mm-hmm. Alejandro, so they're asking here, do DACA recipients qualify for any type of USDA loans or for the Smart Buy program?
USDA loans, as of right now, it's only for conventional and for FHA.
Erwin asks, how does the credit score report work if there are two people applying for a loan? Whose credit score will be used? They look at both, and they usually, I think, go based off the lowest score.
Yes, the lower of the two. So you have applicant A at 700, applicant B is at 650. Banks will always go with applicant B 650 because it's based on risk. Lower the score, they're going to go on that one to qualify the person.
Hector asks, when married, does the credit score of each person, is it looked at even though only one person is working? Depending on the type of loan that you use, I believe that they only look at the applicant, but they can look at your spouse's debts, especially if it's like an FHA loan.
And that's when it definitely comes down to having a loan officer that can really talk to the client and say, you know what, it might be better because if the other person's not working, what's going to end up happening is we're going to have to look at that person's debt and then add that in there. So now, instead of being able to qualify for a higher amount, well, now we don't have an income from the spouse. We do have that person's debt. And now the person who does have the income is not going to qualify for as much. So in cases like that, once again, every situation is different. We want to take a look at the whole loan aspect of it and what's going to be more beneficial. Now, just because the spouse is not on the mortgage doesn't mean they won't be on title. So they will have vested interest. So it's not that, there's only one person is going to have this house, so they're the only one that owns it. No, legally married, you're going to be able to have, you both will be on title, but only one would potentially be on the mortgage because they're the ones who has the income and just their debt. So typically they'll be able to qualify for more.
Alejandro asks, would starting a new job hurt you? Example, I've been at my job for 3 years and I'm looking for a new job. Would this affect my qualification? I believe if it's in the same field, you should be fine. But they do require like usually the last 2 paychecks to verify, the last 2 pay stubs. So you might have to be there a month or 2 to get those pay stubs. What is Carrie asked, what is the lowest and the highest down payment one can place when purchasing a home? Uh,
I'm sorry. Yeah, I was
no,
gonna
go
3% for first-time home buyers on a conventional loan, or 3.5% for FHA loans. That's the minimal down payment.
Can I just say a word about that? Actually, I'm in my other life, I'm actually a financial advisor. So before I worked at TheDream.Us, I became a financial advisor, and it's a very good question, because remember, the more down payment that you can put in, the less your mortgage is going to be. And when we had a financial crisis in the US back in 2008, you know, a lot of it was due to the fact that there were many people putting way too little in down payment and then getting themselves in trouble because they were not able to pay the mortgage. So all I have to say is just the more down payment that you can put down, the better it is. So obviously just think about what that percentage would be for you. Just personally, this is just because my risk and the way that I view the world, right? I would say to people around 15–20% down payment for a conventional loan is more conservative. But obviously not everybody can get 15–20%. So then you have to say, okay, does 10% feel comfortable for me? Or does 12% or 8%? Or is it 3.5? That's really, really low. How much risk are you willing to take? So just be very careful about how you stretch yourself.
And just to give a different perspective on that, me, like I'm a little bit on the opposite end. I would like to get in a home for as little as possible, so that, you know, if I have $30,000 in the account and I put $5,000 for the down payment and a couple thousand for the closing cost, I can use those $22,000 as an emergency fund. If, you know, for some reason my business, my job were to slow down or I'd get laid off, I'd have that in savings, right? But it depends on everyone's financial ability. So,
And just one thing to add to that as well, there are no prepayment penalties on either conventional or FHA. I mentioned that because you can pay down your principal. So you both are correct, you know, but it's exactly how you said it. Everybody's situation is different, but just know that if you do end up putting 3%, 5%, anything down, you can always pay additional principal payments every month. So now you're going to owe less as the months and years go by. So eventually you're going to be able to have more equity in that property as well. But minimal down payments are good. Big down payments are better, obviously, but either which way, it's going to be based on your situation.
Jennifer asks, are there any differences when buying a home in foreclosure? Yes, every property is different. Some of these questions, it really depends. Like, it really comes down to having a good realtor and a good lender to help you through the process. A foreclosure can go up for auction. It can be cash only, or it can go for sale on the market and you can submit an offer using financing. So it just depends on the property. Adrian asks, how do you get into real estate as a job? You can, I mean, there's a lot of real estate is very broad. You can be a mortgage lender. You could be a sales agent. You can work for a construction company selling new houses. You can work for a title company. It's very broad. I would check with, you know, either local companies or mentors that you have or people that you know in the industry that you want to get into.
That sounds like a future webinar for alumni, people who want to go into real estate careers.
Janet asks, what should we consider when picking a location to buy a home or multifamily unit if we want to rent it after living there for a year? I mean, you would want to check prices in the rent prices in the area versus your payment, quality of the neighborhood, all that stuff, location, condition of the property, pretty much like any other property, but a little bit more maybe on the rent side. Omar says, what is needed to own a few properties besides capital? A good stable income so you can get qualified for that mortgage, and a good credit score so you can, you know, get qualified for the mortgage. What if you want to buy a property in full, no loans? Is this possible, especially fixer uppers? If you want to buy a property in full, I think Gabriela means like with no down payment. There are some grant and down payment options, but you have to qualify for them. They have different requirements. And what about fixer uppers? There are some renovation loans that get converted into a mortgage. Slightly different process. but those are also available. Juan asks, what if my wife bought a house? We were married here in the US, as she is a US citizen. We were married only under her credit since the lender did not take my employment authorization, my DACA, and I want to buy a house under my credit for my parents to live there. Will I live with my wife in her house? If you're married, they're gonna consider they might consider the other property as yours as well, since you are there. I'd have to, yeah, that have to be like, that's on a case-by-case basis, really. Oscar asks, what type of loans can DACA recipients apply for if they don't have credit scores? I think credit cards are the easiest ones to get into. You just have to be responsible and safe about it. Some people use car loans, and for me personally, credit cards and car loans are what helped me start my credit. And then some people use personal loans. They don't use them for anything particular, just to pay back slowly to get that payment history.
Feedback on that, what I did to better my credit, actually, I got my wife's credit higher and tagged myself into it. And then basically we helped each other grow our credit. And so finally we're both in the high 700s and just take care of it. Because that right there is the bloodline, you know. You mess up your credit, you're not gonna be able to do much, you know, so.
You want to add in as called authorized users, what Gus is talking
Right.
about. Authorized users, what's going to help the other person's credit score go higher.
So Luis asked, can DACA recipients apply for down payment assistance programs? Alejandro, I'm not sure if you have an answer for that.
That's actually going to be with the county, because we don't really work with directly with down payment assistance programs. If the buyer comes with a grant from the county for those down payment assistance programs, we do accept it, but that would be a county question, Miami-Dade County, Broward County, or whatever county you're in. You definitely want to ask them if they allow that.
Yeah, so there's a lot of questions there. Some of them are a little repetitive. We are short on time, so I'm trying to get to the ones that I think that would, you know, help people the most. Luce asks, how does gift money work? Gift money is a family member or friend giving you the money to closing, and they have to like sign a letter, I believe, so you're able to use it. But on the terms that you're not going to have to pay it back or anything, that is just a gift. Angel asks, when is it too soon to reach out to a loan officer? I always say the sooner the better, because if you have credit issues or you have to save a certain amount down or whatever it is, you're able to plan ahead. So, you know, if you want to buy a house in a year from now, at least you can talk to a loan officer today, and either you know you're ready, so you know you're going to be ready in a year, or you know what to do to get ready so when that year gets here. Miriam asks, if you decide to purchase another home, but you haven't paid off your first home, does it affect your credit? It doesn't affect your credit, but it can affect your ability to buy and how much you can get approved for, and also how much you have to put down. Owner occupant loans usually are a little bit lower, you know, 3.5%, 5% down, 3% down. While if you're buying a second home, they can ask for a lot more down. So, okay, so let's see.
So Edson, what we could do is we can do our little closing wrap up. And then for those after the closing, we can stay on for a few more minutes if Gustavo or Edson, if you have more time to keep answering questions for another 10, 15 minutes, so that in that way we allow people that need to leave after an hour to leave.
Yeah, of course. Sol asks to everyone, can you tell us your contact info? It'll be at the end, so that way you guys can reach out to Alejandro, Gustavo, any questions you might have. And Janet asks, when is it a good time to buy the market? COVID, timing the market's really hard. So that's something, you know, a lot of the saying is, don't wait to buy real estate, buy real estate and wait. But yeah, so anyways, we're gonna wrap it up here. Thank you guys for coming to this event. Let us know what other topics you'd like for us to address in the future. If you have any other questions, you can feel free to reach out to us. Here's the contact info. And I'll pass it off to Jose, who's gonna talk a little bit about the Alumni Council.
Hello, everyone. My name is Jose Manuel. I am the Communications Marketing Chair for the Dream.Us Alumni Council. Thank you so much for coming. Thank you to Gustavo, Alejandro, Edson. the DreamUS Council for putting this together. So I just want to talk to you a little bit about the DreamUS Alumni Network. Before you guys go, just give me a few more minutes of your time. I just want to share my screen real quick just to show you our network. What we're trying to do here is we're trying to build this so that we can have a close community where we can ask, we could get support from one another. So just give me 1 second here and I will share my screen.
And while Jose's doing that, if you have more questions related to home buying, just know that we'll stay for a few more minutes after Jose speaks to keep answering your questions. Okay, go back to you, Jose.
Yeah, definitely. So as you can see, I have in front of me, I hope you can see my screen. It is the DreamUS Alumni Network. What I love about this platform is that it actually has really cool features like mentoring, like jobs are posted regularly. And so this is a community for DACA recipients, for TPS recipients. And as I mentioned, we're trying to build it just so that we can feel comfortable with one another. What I also enjoy the mentoring, like let's just say, for example, you are searching for a job or you just have questions about your career or anything like that. You can look through the members, you can see who might have experience that already went through that, and you can reach out to the person directly. And there is a really cool feature, let me see if I can pull it up here, where you can actually message the person. If the person agrees, you can video chat directly on this platform. I don't think there's other platform that can do this. So you can engage with whoever you feel comfortable with. And I just think it's a great platform. So what I would encourage you guys is please go ahead and download the app on your phone. Melanie is going to share the link on the chat box. So if you can sign up for it and download the app, it is definitely going to benefit you and just help one another to continue to build our network.
Thank you, Jose. And for example, there was that question of how do you become a realtor? If you are on the Alumni Network platform, you can just type realtor and it'll show you all of our alumni who are realtors, and you can chat them directly and find yourself a mentor. So with that, thank you, Jose, for that. Edson, Gustavo, and Alejandro, would you be able to stay on for another 10 minutes to keep answering questions?
I'm able to stay on.
Okay, great. And how about you, Gustavo and Alejandro? If not, please feel free. Thank you so much for your hour of your time, but let us know.
It's okay.
Yeah.
Okay. Perfect. Okay, so Edson, if you can pull
Yeah.
up questions. And then before he starts, Melanie shared in the chat box the link to join the Alumni Network and also the slides that were shown today. So look for those links in the chat box. All right, back to you, Edson.
Awesome. Okay, so Lisa asks, the $15,000 first-time home buyer forgiveness, can you explain it, and does it apply to DACA and green card holders? I believe what you're talking about is the $15,000 tax credit that Biden proposed. I believe it's a proposal, so it's not anything in effect now. And if it's a tax credit, I think it would be credited to you whenever you do your taxes. So it's not money you get up front. I don't know if you're familiar with that, Alejandro.
Yeah, it's correct.
Okay, so then JV asks, can DACA recipients apply for a 7-year ARM mortgage loan? I believe you'd be able to, as long as it's a conventional or FHA loan. I would highly not recommend an ARM mortgage, an ARM meaning that it's not a fixed rate, an adjustable rate mortgage, because you don't know where interest rates are going to be at in the future. And right now you're able to lock in a lower interest rate.
And especially with the way that the economy is going now and the way that the government is working right now, ARM loans can be pretty risky in the future. So stay in the fixed rate loans.
Yeah, because you can lock in something for like 3.5% right now, as opposed to something for 3%, and then 7 years from now you have to refinance it at 10% or something, right? Clarice asked, can you tell us more about property taxes? Alejandro, do you want to touch base on that, or Gustavo?
Regarding property taxes, I can't see the question. What's the question?
Just says, can you tell us more about property taxes?
Well, property taxes are paid when you purchase a home. So they're going to be escrowed. So just to give you an idea, escrow basically means that taxes and insurance are included into the payment monthly if you're not putting more than 20% down. Yeah, even if you do put more than 20% down, it's optional. But if you're putting less than 20% down, it's mandatory. So your taxes are included into your monthly payment. And then as long as the homeowner makes their 12 payments per year, your taxes and insurance will always be paid. Now, you would want to apply for what's called homestead exemption. Homestead exemption is a discount the county gives you for making or living in a primary home. It's only for primary homes. And of course, you do get a discount based on those property taxes.
And Gustavo, is that homestead extension nationwide or just where you are?
Homestead, I believe that's nationwide, yeah.
Okay.
Yeah, nationwide.
Nationwide.
So Daniela asks, does anyone know the process about getting a small loan for a tiny house? You would probably get, if it's on a house, you'd probably get a mortgage like anything else. But some banks and mortgage lenders do have minimums of a minimum mortgage amount that you
So,
need.
a lot of tiny homes also, they're more like mobile homes, right? So
Oh, she said tiny home. Yeah, but yeah.
okay. Well, what I was going to is that those also you could get a loan, but it's a separate type of bank and typically have higher interest rates.
That's where that private lender came in. With those type of properties, a private lender would be able to finance those.
And she also asked loans for new construction. For if the house is built, you can purchase it with the mortgage. If you're looking to build a custom home, then that's a different process. And I believe you have to go through a construction loan, which entails different requirements, interest, and all this other stuff.
Yeah, there's two aspects. There's pre-construction, so there's a developer, and there's financing that they have, and then you're buying it pre-construction, or there's one that it's a property on a piece of land, you want to demolish it and build a new one. That's what it's talking about as far as a construction loan.
Mm-hmm. JV asks, can I use the FHA or conventional loan as a rental property without living in the house, or do I have to live in the house? I believe you have to live in the house for at least a year. It's one of the requirements of the FHA loans. Mrs. Pina asks, if I have a large loan, a car loan, would that affect the amount you can borrow to purchase a house? Yes. It'll affect your debt to income, which can affect how much you can borrow for a property. Zuleika asked, do I have to finish paying off a car before starting the home buying process? It depends on your financial ability, right? You might not need to touch the car payment at all, right? How much money can one receive as a gift? Alejandro, Gustavo, are you guys?
As a gift, it's unlimited. As long as it's from a family member, it's unlimited.
Okay. And I think that's more or less all of the
people that are asking whether we know people in North Carolina or South Carolina or whatever. Like, if you guys need help contacting different lenders or realtors around the nation, either I or Edson could help you locate an agent or a lender, and just reach out to us. We will gladly give you a recommendation. I work with Keller Williams for nationwide, so we could easily just connect it with somebody and they'll be able to help you out.
Yeah.
There's a question there, Santiago. I live in New York City and I plan to buy in PA. Do I need to find a lender in PA, or can I look for someone based in New York City? So the loan does have to be originated. Well, it just depends on the person you're working with, because if they're a broker or a lender that has multiple licenses in different states, they can be based in New York and finance a property in PA. But if you're working with a lender that's not licensed in PA, they wouldn't be able to do the financing. So you would have to find a lender that is licensed, of course, in PA.
Yeah. Okay. Julio asked, what is your opinion on buying land and building a house? Do you think it's cheaper or the same? From my experience, building is usually more expensive. Price of labor, materials tend to go up as the price of land as well. But it depends where you live as well. Would you recommend a person build up their credit versus paying full in cash? I would highly recommend you build up your credit. Credit is very important and very useful. And the money that you're going to use to buy a house in cash, you can put a down payment and use that money for something else, to start a business, to invest in something else, maybe make a better return, right? Giselle asks, can a person with DACA legal status co-sign on a loan so that we can get approved for more? Without DACA co-sign, yeah, I believe you're able to have someone else on the loan as well. Let me know if there's any other questions or anything I might have missed. Feel free to put it in the chat or raise your hand. Or
So Julio's asking, what is your opinion on buying land and building a house? Do you think it's cheaper or the same? It's definitely going to be cheaper, but you got to have the experience. You can't just buy land and think that the bank's going to give you the money to build it. They're going to say, okay, who are you? What have you done? Let me see your track record. It's unless you hire a contractor to go ahead and build it for you, then yes, but it just depends. This is a by case, right? Like down here in Miami, you're gonna find a lot for $180,000, and that's a 5,000 square feet lot, right? It just depends what you want to do. You know what I mean? But you got to pay that cash. There's no financing on lots. I mean, I'm sure you could find a bank that's gonna finance it, but once again, the rates are gonna be very high because of the risk. There's nothing there. There's just land. You know, they can't just go and flip it. So yeah.
So let's do the last two questions, and thank you for putting the contact info up there again so people know. But someone's asking, so do you think right now is a good time to buy? And what do you think the market will look like in a year?
So for me, it's always a good time to buy. Every single person that I've worked with, and I just did this exercise to prove a point. I'm gonna do a YouTube video about this. Was worried about the purchase price, right? And there was like, oh my God, the market's gonna crash. The market's gonna crash. The market's gonna crash. What's gonna happen? It's gonna keep on going up. And why do I say this? Everybody has equity in their homes. Everybody has, the majority, right, of the people have equity in their homes. So if you lost your job and you're in forbearance, let's say, for example, you'll find a way to refinance, right? And you'll find a way to take that money out of there. Now, there is some people that are going to lose their homes and they're going to go in foreclosure. I'm not saying that's not going to happen, but for the majority, people have equity. And right now, if you want to buy a home, you got to put neck in the game. You can't just get a home for free, like back in the day in 2009. Okay, so that's the difference between now and back then. And because we have such shortage on real estate, it's I gotta tell you, it's the supply and demand. You know what I mean? You're gonna put your house whatever price, and they're gonna buy it from you. You know what I mean? So for them to be a bad time to buy, I don't know. It just depends what you want to do. You get me? But I don't see the properties dropping down in value. I just see because of inflation, it's just gonna keep on rising.
And that's from a realtor's perspective, which is exactly on point. From a lending rate perspective, now is the time where the rates are historically low. I mean, if you look at the average over the last 20 years, the average interest rate is actually almost 6.5%. Right now, we're talking at 3.5, even 4%. It's right, as Gustavo said, it's a great time to buy because your rates are lower. And where it's going to be in the future is now, and the future people asked last year, 2 years ago, 3 years ago, and it's still been a great time to buy. So at the end of the day, owning a home, and I hope with this whole presentation, it really inspired and really promoted the fact that look into the ability of buying, look into the opportunity to purchase. This is the great time now, or in the near future, or in the late future. Just get on the mindset of wanting to buy and put your focus on saving money, building your credit, building that income, building that ability to purchase. And obviously, as we've been stating throughout this whole presentation, the benefits of owning a home outweigh not owning a home.
And I would say the only time that you might want to hesitate buying a home is if you think you're going to move immediately, right? Or that you will have to move immediately. Then you run the risk if there is a down market a year or 2 years from now and you're moving, then you're going to lose money. But if you're planning, I'm going to buy this house and I'm going to live there at least 7 years, then no reason to wait, especially because the mortgage rates are so low.
I have to agree with you 100%. So let's say, for example, you guys go and you're studying in New York and you're going to New York to study, and you're only going to be there for 2 years. That's a terrible investment. I mean, in my opinion. Why? Because in those 2 years, yeah, you might have gained some equity, But then you got realtor fees, you got closing costs, you got to have a lot of things that's going to eat up into the equity and potentially you're going to lose money. So I agree with you 1000%.
Yeah. Make sure you're going to stay there for at least 7 years and then go buy because the rates are low. Okay, so I think with that, we might want to close this because I know it's already 5:12. I kept you longer than usual, Gustavo and Alejandro and Edson. Thank you so much for doing this. Alumni, join the Alumni Network. Go to the link that was posted. Melanie, you can post it one more time. And if you're a current scholar, know that when you graduate, at the end of your time as a college student, you will be invited to join the Alumni Network. So if you're a freshman or a sophomore, junior, you don't have to join. Don't join our Alumni Network yet. But if you're a senior right now, or if you're an alumni, go ahead and join right now. And then you'll get to meet amazing people like Edson and Jose Manuel that you've met here today, the leaders of the DreamUS. So have a good night. Stay safe. And once again, thank you to the three of you for doing this webinar with us today. Bye-bye, scholars.
Thank you, everybody.
Bye, everyone.
Guys,
Take care.
Thank you.
Thank you. Thank you for joining.
Thank you. Okay, I stopped the recording. I'm going to end the meeting now. Good night, everyone.
Yep. Good night, everybody. Bye-bye.